South African inflation expectations for the second quarter eased to 6.3% from 6.5%. That's according to the latest Bureau for Economic Research survey. This followed a 1 percentage point decline in the first quarter. Average CPI inflation expectations for next year also fell, sliding to 6.5%, while remaining unchanged at 6.8% for 2012. The survey found analysts revised their 2010 expectations the most at 0.5% to 5%, while businesses adjusted theirs to 6.9%. Down 0.2%. Well, joining us with more on that is George Kershoff. He's Deputy Director at the Bureau for Economic Research down at Stellenbosch University. George, good afternoon.
Good afternoon, Stephen.
And George, it looks like inflation expectations are continuing to moderate as the year progresses, and we've seen a number of analysts and businesses downward revising their expectations. So it's looking pretty positive on the inflation front at this stage.
Yes, indeed. I think the biggest adjustment came from the analysts. Business people and trade unions, in contrast, adjusted their expectations for this year downwards by a much smaller extent. The inflation numbers that have come out so far this year have generally surprised people. They have come in lower than expected, and we will see some more figures tomorrow. And that may have played a role why analysts have adjusted their expectations downwards so much. In contrast, business people, there are two groups. The retailers specifically struggle. They see huge downward pressure on prices. They don't have any pricing power. So inflation is low on their side. But we picked up amongst manufacturers that there are some increases in purchasing prices, perhaps from commodities, and on the other side, labor costs.
Well, that would make sense to me, and I don't know if you'd agree, George, because of course we have seen consumer inflation surprising to the downside, but we get producer inflation on the other hand, and we're getting numbers out on Thursday, and that is starting to accelerate at this stage. So would that tie in with why manufacturers are a little bit more pessimistic about inflation expectations?
Yes, that is definitely playing a role here. It is not absolutely clear where this price pressures come from, because manufacturers also face very difficult conditions. Demand, both local and foreign demand, remain very weak. So it must be some input costs that are on the increase, and they have very little room to absorb this, so they have to pass this on. And as we know, eventually that will spill over into consumer prices. But I think from the survey's perspective, the Reserve Bank will look particularly at next year's inflation expectations, 2011. That are the area that they can still influence by monetary policy decisions that they make today. And the fact that it remained under control, that would certainly be good news from their perspective.
Well, perhaps just looking at unions, because you mentioned right at the beginning that unions were also a little less optimistic about inflation going forward. And of course, we do have these wage demands at the moment. Eskom workers, the very latest to push through. Inflation demands way above inflation expectations at this stage. I mean, do you think that this is going to put upward pressure onto inflation going forward if we do see these demands continuing to come through?
Yes, there are the labor unions, obviously, when they are in wage negotiations, and in the first round, usually they put in a higher increase. I think they have run into difficult conditions. Employers were generally not able to pass on such big increases. From an inflation point of view, however, business people, they have the real power. They can either agree to these high wage increases, or they can also pass this on in terms of higher prices for the goods and services they produce. So given the weakness of demand at present, even if labor unions have high wage demands, business people will be in a very difficult position to agree to that. And if they do agree to high wage increases, they will have to control total wage costs in another way, and that will lead to more job cuts.
How about administered prices? You did mention input costs, particularly maybe affecting the manufacturers' inflation expectations. And of course, we did have just a couple of months ago those ESCOM increases starting to filter through into producer inflation. And of course, they are going to start filtering through to consumer inflation from now on as well. Is that a factor to consider with the inflation outlook going forward?
Yes, of course. The services, administrative prices, and depending on how much, in the case of manufacturers, but also retailers and other firms in the private sector, how much electricity makes up of their total costs, that will have an impact. One must, however, remember the rand remains very strong, so certain imported items remain, the cost increases remain low. Also, it leaves very little room for firms in present to increase prices. This situation can turn around from the second half of next year onwards, perhaps from the first half already, but more strongly from the second half of next year when demand recovers more strongly, and then the pricing power of businesses is likely to improve.
Of course, we had retail numbers out from the Bureau for Economic Research yesterday as well. Business confidence among retailers falling 13 index points in the second quarter of the year. And of course, this again ties in with what you were talking about a little earlier about retailers struggling with downward pressure. Would you see this also improving then into the second half of next year?
Yes, hopefully so. Retailers were very badly hit. I think the expectations were sky high, and that didn't materialize in the second quarter. And they, even if they lowered price increases, they still face very weak demand, particularly on the non-durable side, your food and your basic items. So retailers faced a double whammy where they have both very low price increases and low, and some cases falling volume growth, and obviously their turnovers are now very under pressure, and they still have fixed costs. So to remain profitable, they have to look at costs to make up for the gap with very weak turnovers, and that has contributed to this fall in confidence. One realized from all these different indicators that at this stage of the business cycle, although we have seen a big improvement, there are typically uncertainty. It is times when confidence increases and then it declines, and similarly economic activity picking up and then slowing down again. And I think from next year onwards it will hopefully, depending on the world economy, if that also recovers more strongly, be a more sustainable, broad-based recovery.
Well, George, just taking all of this into consideration, the low demand in the economy at this stage, the inflation outlook going forward, and of course we had some jobs numbers out just a short while ago from Stats SA that showed that 79,000 jobs were shed in the first quarter in the non-agricultural business sector. Do you think this just all supplies more grist to the mill for the Reserve Bank to cut interest rates again when it meets at the end of next month?
Yeah, that's hard to say. At the moment, our forecast is for interest rates to remain unchanged, but there is certainly a probability that the bank will take this into account. Inflation expectations remaining under control, but the weakness of demand and also the evaluation of events abroad, what is happening to the international economy. So a lot of factors play a role. But at the end of the day, they will have to keep their focus on what's happening to inflation in the second half of next year. But if we look at what the analysts say in the survey, they see inflation picking up to 5.7, so closer to the 6% upper end, and then in the year thereafter 6%. So it will be a weighing up of the weak local economy and looking out for inflation in the second half of next year and in 2012.
George, we have to leave it there, but thanks very much for your insights this afternoon.